there are people lining up, forming queues to buy gold. And gold is at an all-time high. So nobody wants Bitcoin when it's in the low 100Ks. But once we get to like $500,000 per Bitcoin, I think the world's going to wake up, central banks are going to wake up, and nation states are going to start joining the race. And that's when you go to 1 million very quickly and beyond.
In today's video, Samson Mow, CEO of Jan3, and a leading voice for nation-state Bitcoin adoption, lays out why the next leg of this bull run could be faster and more explosive than anyone expects. He breaks down how altcoin speculation, ETF accumulation, and corporate treasuries are reshaping Bitcoin's market, and why today's calm might be the setup for a massive move. Mow also reveals his two-tier Bitcoin theory, where institutional Bitcoin and free, self-custodied Bitcoin could one day trade at different prices, and revisits his bold $1 million prediction. If you want to understand what's really coming next for Bitcoin, this conversation is a must-watch. Don't forget to subscribe and join our Telegram group for daily Bitcoin insights, links in the description. Let's catch up with Samson.
I'm very bullish, and I have a very bullish thesis, but I've been kind of mildly bearish for the last maybe 5-6 months, just because I've seen the alts and meme coins running very hot. And just historically, when that happens, we come back down, and this is exactly what we saw. I think there's been a lot of capital flooding the markets with altcoin treasury companies and the like, and I think it's just been a massive distraction. It was always due to overcorrect, and I think that's where we are at now. And Bitcoin usually will come down with everything else when it comes crashing down. And we hit 107-ish today, so I think this is probably a good correction. Also, we saw a massive amount of liquidations, also largely due to alt speculation over the past 3 days, maybe. I think people were getting liquidated 5 or 6 times, right? The big crash liquidated them, and then they went long again, and then they got liquidated, and then I think maybe some shorted the market, and then we went down again. So it's been a wild ride for a lot of these traders. I think when a lot of this capital is flushed out, that's when we have more solid price discovery and sounder footing to go up on. And I think we got a taste of October, early October, and there's still some days left in the month to go.
One of the clearer trends, zooming out a little bit, is that Bitcoin's volatility is declined. It's any other asset whose volatility declined that much, you'd almost wonder what's going on. But going from a 100 vol asset to 70 to 50, and now many days kind of around 30% volatility, is this a sign of maturity, or is it a sign that there's just so much adoption and user base and different wrappers that it naturally kind of dampens volatility? And do you think it's a healthy thing, or is it a sign that there's just too much distribution of Bitcoin into different packaging?
Yeah, Andy, that's a pretty good way to look at it, I would say. As Bitcoin matures, we're going to see less volatility. And this is a function of, I would say, 2 things. One is the Bitcoin treasury companies, especially Strategy, which has scooped up a large amount, and they are a very consistent, a very reliable buyer at any price. The second is the ETFs, the Bitcoin spot ETFs, largely IBIT. And they have also proven to be a very reliable source of demand for Bitcoin. And I think with these 2 driving forces, it was always bound to reduce volatility, at least in the near term. But longer term, I just don't see Bitcoin sitting idly in this range, or even in the 200,000 range. And I think we're seeing a foreshadowing of this with gold, which is the largest asset on the planet, which has skyrocketed and went up by 50% this year. It would be more like Bitcoin's trying to lull everyone into a false sense of security that they have time to accumulate. But unlike gold, Bitcoin is incredibly scarce and finite. There are only 21 million coins. Gold production will ramp up as demand increases, and we will see that. And we just don't know how much gold there is out there in the world. It's impossible to mathematically, definitively quantify that, but you can with Bitcoin. So I think we're going to see Bitcoin do its thing. It'll mirror gold, but probably in a more spectacular fashion.
So just to follow up on that, you could argue there's somewhere between 15 and 20% of all Bitcoin now is held in these secondary derivative forms, right? And if I trade a DAT stock, or if I trade an ETF, or if I trade an option on an ETF or a futures contract, that's not creating a transaction on the Bitcoin network. So there's interest on the positive side, there's a broader user base, easier access, easier on-ramping, broader user base. But at the same time, there's less actual activity on the network, which some people cite as a sustainability threat. So, this is your space. So is the diversification of packaging of Bitcoin net healthy, or is it kind of net dangerous to Bitcoin, the network, and to Bitcoin's internal ecosystem?
So I've theorized about this before, that you might have a bifurcation of the Bitcoin network, or a split between approved Bitcoin that sits in treasury companies or with corporations, and then you have free Bitcoin, which is free flowing, and people are transacting it as money and self-custodying it. And that's still a possibility down the road. I don't think it's a near-term phenomenon, but down the road definitely is possible. But I would say Bitcoin moves in cycles, not the price cycle, but just in terms of adoption and usage. And you see spikes in high transaction volumes, high fees, and then there's mass panic that, it's too expensive to transact Bitcoin. And then you have lulls like now, which is a period of less activity. People are not really transacting on chain. And in part, it could be due to other layers of Bitcoin, like Liquid, like Lightning, or just transacting on centralized exchanges and through custody swap agreements with custodians and whatnot. But I think this is just a temporary phenomenon. And as you get more Bitcoin adoption, especially in the emerging world, Latin America and Africa, where people don't have access to those vehicles, they're going to be forced more or less to hold it in self-custodial wallets, or just a wallet of their own. And that will lead to on-chain usage. But it's a interesting phenomenon. When it's busy on chain, then the sky is falling because fees are high. When it's low, then people say, there's no one to pay the miners and there's no security budget. But I think overall, Bitcoin does manage to balance out both sides eventually. But there is a skewing of Bitcoin development priorities towards layer twos, which I think means we need to make some adjustments to make spam reduction a thing on the main chain too. Because if everyone's working on a layer two, there's not much incentive to transact on the main chain, especially if people are spamming the chain with JPEGs and NFTs.
Can you tell us a little bit more about your split theory, just for our audience? What would that look like theoretically?
Well, theoretically, it would just be like two prices of Bitcoin. Similar to Argentina, you have the dollar blue, and then you have the other price, the official price, right? So you would probably see a lower Bitcoin price with an ETF, and a higher price for free-flowing spot Bitcoin in your wallet.
Samson, the last time you and I spoke, I believe we touched on your $1 million Bitcoin prediction. I think you said that was within the next 5 years, and that was probably about a year ago now. Is that still in play, or have you revised it given some of the things we've talked about so far?
No, I think it's just delayed. And I've been predicting 1 million for maybe 2 years now, because all of the factors to catalyze that shift to 1 million are here, right? The previous dull factors for bull runs has been exchanges and their inability to onboard a lot of people quickly because they're bottlenecked. But with ETFs, I think this is the key factor in my theory, is that there is no bottleneck anymore, because the ETFs can accumulate any amount at any time because they'll buy on behalf of the users. So you mitigate that retail barrier that kind of stymied previous bull runs. And the matter of the 1 million run is just time, and things can delay it. Like crypto heating up, I think will always delay it, because people allocate capital. Even serious investors might allocate capital. Like I think Cathie Wood was buying Ethereum treasury companies, right? All of that has to come back to Bitcoin. And I think all of it will be very violent. I also have another theory called Max Pain theory. And that is like the most painful outcome for the most people is the most likely outcome. So if we think that Bitcoin volatility is always going to be low, and we just gradually step up to 1 million and to 10 and to dollar parity with sats, that is the best case for the world. Everyone has a long time frame to accumulate. Everyone has time to buy. And I don't think that's going to be the case. And I think a lot of people realize this. If you look at Saylor and Strategy, he's buying anytime. Like it doesn't matter if it's a top. He doesn't care about dips because there is this urgency because the time is running out to buy Bitcoin at these low prices. So we're going to see a fast run up, and gold is a good parallel for what we're likely to experience with Bitcoin. If you look at the picture circulating right now on the internet, there are people lining up, forming queues to buy gold, and gold is at an all-time high. So nobody wants Bitcoin when it's in the low 100Ks, but once we get to like $500,000 per Bitcoin, I think the world's going to wake up, central banks are going to wake up, and nation states are going to start joining the race. And that's when you go to 1 million very quickly and beyond.
So what's the time frame? You said it's delayed. I'm sorry, Andy. You know I gotta get a time frame here.
Yeah, no, go for it.
What's the time frame for that $1 million prediction now?
It's difficult to say, but I would say sooner than later. So every day I wake up, I'm expecting we're going to see like 100K Omega candle on the charts because it's been suppressed for so long. Like we should probably be at 200,000, I think is a fair market price based on demand. And if you look at inflation, just if you assume inflation, I did a calculation, real inflation is probably 11% or something like that if you base off of eggs. And if you factor in our previous high peak in 2021, we're just keeping up with inflation. So we're kind of tracking M2. We're maybe tracking gold a little bit, but we're nowhere near where we should be in terms of real price discovery happening.
Samson's message is clear. Bitcoin's calm is deceptive. While traders chase altcoins and short-term noise, the real accumulation is happening quietly in ETFs, on corporate balance sheets, and soon at the nation-state level. The window to stack meaningfully is closing faster than most realize. When the world wakes up, it won't be gradual. It'll be sudden, violent, and irreversible. If you found this conversation insightful, make sure to subscribe, like, and share this video. It helps more people discover the signal. And join our Telegram group for daily Bitcoin insights and macro updates, links in the description. Until next time, stay sovereign, stay curious, and keep stacking sats.